Thank you for joining CMB Regional Centers exclusive webinar. Our event will be starting shortly. We are excited you could all be here today. Hello and welcome everyone. We will be allowing just another moment or two for our attendees who are just joining us to settle in. Give us about another 2 or 3 minutes. Thank you. Hello to all of our attendees. I am Andrew Radosevich, Global Market Specialist for CMB Regional Centers. I will be your host for today's event. On behalf of CMB Regional Centers, a warm welcome to all of you that were able to join us. It is truly our pleasure to have you here today. Today, we are delighted to present to you America's Tax System, What Immigrants Should Know. We hope you find it a tremendous value discussing the topics we'll be covering today, and CMB is thrilled to add today's event to our library of topics in our Coming to America series. We have some distinguished guests to lead our conversations today. First, our very special guest, Miss Dianne Stewart, President of Pathway USA. Dianne is an expert in international relocation, as it is the focus of Pathway USA as well. She has been able to assist over 1,500 families to successfully transition their lives to another country, and has been doing so since 2006. Next, Mr. Jack Santaniello, partner and attorney at law with Shumaker. Jack's more than 20 years practicing law has made him known for his assertive and open-minded legal approach. Corporate clients turn to him for his experience on mergers and acquisitions, general corporate and commercial transactional matters, franchise, distribution, and licensing law, as well as copyright and federal and state trademark matters. And finally, Mr. Ky Boyle, Vice President with CMB Regional Centers. Ky will hit a milestone this October of 10 years at CMB, and it's safe to say that he's one of our most traveled and valued members in our organization. Thank you for all you do for our company, Ky. So today we will start out with Ky and Dianne presenting separately. Then following, Jack will present and cover tax information in a very high overview. Following Mr. Santaniello's presentation, we will look forward to an interactive Q&A following those presentations. Some of you have already sent in questions ahead of our event today, and thank you for those. If those questions apply to our topics today, we will start with those questions first, but still encourage you to ask questions in the Q&A button located in the controls for today's webinar. If your questions are related to individually specific tax-related matters, we request that you please reach out to Jack via the contact information provided during our event today, or your own accountant or advisor outside of our event today. One last reminder, we'll be leaving audio muted for the entirety of today's event. So without further ado, Mr. Ky Boyle. Oh, Ky, you're muted.
Thank you, Andrew. Certainly appreciate the kind introduction, and welcome to our panelists, and welcome to those of you who are joining us virtually. Love to be with you today face to face, but COVID-19 has interrupted a lot of plans around the world. So thank you very much for being here and for being part of today's presentation. We've got some terrific information to share with you today. Delighted to have our two panelists. Dianne, who's been with us before, shares her expertise on coming to America, some things to think about, really amazing presentation. And Jack is really an expert in many different aspects of legal and business law, and his tax information will be very important for everyone that is joining us today to hear and to have an understanding of what taxes are in the United States, and to demystify or to kind of push away some of the fears that you may have, and to simplify some of the tax information. So Jack, thank you as well for joining us today. So today's agenda, I will go through the CMB project, but before I get there, I'm going to talk about the EB-5 investment program. And as part of that, we'll talk about the basics of EB-5. We'll meet the CMB team. We'll talk about the EB-5 timeline, and the USCIS is the United States Citizenship and Immigration Services new adjudication policy. Talk a little bit about COVID-19 and EB-5 and why it matters to anyone looking to make an EB-5 investment. And then I'll talk a little bit about CMB's current project offering that is open for subscription now. And Dianne, she's going to share her expertise on preparing for your new life in America, arriving in the United States and living in the United States, and some things to think about before you come to the United States. And then after you arrive here, how to settle in the United States here in America, and how to be happy in your new chosen American home. And then Mr. Jack Santaniello, he is going to talk a lot about U.S. taxes, and there's a lot to talk about, but he's going to hit the high-level information, taxes 101, the basics, tax types and categories, the various types that are out there. And then living in the United States, where can you live that doesn't have any personal income tax? What states don't have personal income tax? Jack will talk a little bit about that. Filing tax returns, he'll talk a little bit about that, talk about some other topics as those go on. And again, like Andrew had mentioned, we encourage you to participate by sharing your questions with us. So be sure to do that, and we'll take as much time as necessary to get through those questions from those of you who have joined us today from around the world. And the basics of the EB-5 program as I transition in from our agenda, it's really a full schedule to the program itself. The basics of America's EB-5 program, the vast majority of you who are joining us today have a good understanding of what the EB-5 program is. But at its foundation, the EB-5 program, and the reason that the United States Congress developed the EB-5 program in the 1990s is it is a jobs creation program with an immigration benefit. For the investors or the participants in the EB-5 program, it requires an investment. It also requires that they create 10 jobs as a result of that investment. So at the very core of the EB-5 program, it is a jobs creation program, and the outcome for the participants is the green card, is that immigration benefit. EB-5 program is administered by the United States Citizenship and Immigration Services, known as the USCIS for shorthand. And in the category of EB-5, there are 10,000 visas available to qualified foreign nationals seeking to obtain permanent residency here in the US through the program. Now, 10,000 visas does not mean 10,000 applications, as many of you are aware. Each participant in a filing must have their own visa to enter the United States. So in the case of a family of four, mama would get a visa, papa would get a visa, would take a visa, and the two children would take a visa. So a single family filing in that case would absorb 4 of the 10,000 visas. So it really limits the number of visas that are available, or the filings that are available, to somewhere around 3,000, 3,500 in any given year. The required investment is presently 1.8 million, or there's an exception to that, and that is if the project that is being invested in is in what's known as a targeted employment area, an area that is in a rural or countryside, or it's high unemployment at 1.5 times the national average of unemployment. If the project that is being invested in is located in either of those two types of locations, countryside or high unemployment, then it allows for the exception of a reduced investment amount to $900,000. The project that you'll see today from CMB qualifies for the lower investment amount of $900,000. The program itself, for participants, they need to file 2 petitions. The first qualifying petition is known as the I-526 petition, and that's the one that the United States Citizenship and Immigration Services evaluates and qualifies the participants to move through the rest of the program. With an approved I-526 petition that allows the participants to move forward with their immigration pursuits. The USCIS will evaluate whether the new commercial enterprise or the new business that's being created and invested in will create at least 10 qualifying jobs, and they'll do a very careful and close examination of the funds, the money that is being used to invest. The source of funds and the path of funds must both be legal. It has to come from a lawful source. The second petition is known as the I-829 petition, and that is the petition that provides the USCIS the proof that the jobs have been created and the requisite or the required investment amount has been made, and that investment has been sustained throughout the conditional residency period. And that conditional residency period is a period of 2 years. So the timeline here shows that begins with the filing of an I-526 petition. And you can see that it channels through various steps before you enter the United States, and then even after you enter the United States, with the eventual outcome, the opportunity, if desired, it's an option, to file for citizenship after 5 years of qualifying residency. Now, the thing that's on this screen, the timeline that I wish to speak to specifically, is in March of this year, March 31st, 2020, the United States Citizenship and Immigration Services moved to a visa availability approach in the adjudication of I-526 petitions. What that simply means is they moved away from their former first in, first out approach of adjudicating I-526 petitions, and now they're adjudicating them based upon the availability of a visa for that particular applicant. So for those who are in countries such as China and Vietnam and the like, their queue is long enough that there are multiple years of having to wait for a visa because the allocation to that country is exhausted every year for several years in the future. If you are a foreign national from a country that does not have all of their annual allocation used up, then you have an available visa in this simplified example. Then you would get out of the long queue, and there are thousands of applications in front of you. You'd get out of the long queue, and the USCIS would adjudicate your petition based upon a visa being available for your application. There's a lot more to go into that. We can talk more in depth on that if you'll reach out to us. We've got some information to do that. Our talented team members at CMB will be glad to walk through that process and just what that new adjudication policy means or could mean for you. But I think it's important that if you're investing $900,000 or $1.8 million with a regional center, you need to know who you're working with. And so I'd like to introduce to you some of the most talented EB-5 people on the planet. And that's the CMB team. And those aren't necessarily my words, although I believe it. But also the words of those who we work with around the world. We're recognized as being one of the oldest and most active and most trusted regional centers in the industry. And we're often complimented on the talent that we have recruited and the talent that we retain as part of the CMB team. And you can see that we have our executive team includes two primary people. And those two primary people are Mr. Pat Hogan, our founder and CEO, and Noreen Hogan, who's the president of our company. We're a family-owned company. The Hogan family guides CMB through its day-to-day processes, and CMB continues to be a leader in the industry simply because of our leadership and the Hogan family and the way that they conduct themselves ethically and soundly in the business practice. So when we look at CMB and in the breakdown, our teams we have a legal team and a graphics team, and we have a team that does nothing but evaluate future projects. We also have a team that does nothing but compliance. They make sure that the users of the end funds remain in compliance with the agreements that they've signed. We ensure that our customer relations team are knowledgeable and can answer any questions for prospects or those limited partners who have already invested that need to have information or questions about their particular project. We also have an opportunity for our back office team to interface with attorneys, with the investors. We have also the opportunity for anyone that is around the world to reach out to CMB 24 hours a day, 7 days a week, and receive a live contact. We have a sister company known as CMB Swissco. They function outside of the United States in various areas of the world, including China and Turkey and India and Vietnam and such. And they help to support that contact. So if you have a question of CMB or you'd like more information from CMB, you reach out to us and we will respond to those questions in very short order. It's important to note that when you're talking about a company that you're going to invest a significant amount of money with and put a lot of trust in, that at any time that you reach out to them, you can certainly be assured that they are there for you to talk. So that's part of the responsibility that CMB takes for every investor or every prospect that reaches out to us and that is looking to make a significant investment in money, in time, and in their life, in their livelihood in coming to the United States Our commitment is to you, and we understand that if you're successful, then CMB will be successful as a company. Mr. Hogan founded the company on that simple premise. If our investors are successful, CMB would be a success as a company. It's not the other way around. It's exactly that way. So everything that we do is to ensure as much as we possibly can that our investors and our families that have trusted CMB are going to be a success. And I wanted to talk a word about COVID-19. It's kind of the elephant or the big gorilla in the room, if you will. Everyone's talking about it. It has impacted every corner of the world. And every business has been impacted in some degree or another, whether it happens to be a sick employee or a financial impact. It's important to note that CMB has been in business since 1997 as a regional center. We anticipated some possible challenges. We've been around long enough to know we've been through quite a few business cycles and we understand some things. And when there were clouds on the horizon, Mr. Hogan was clearly aware of the fact that we needed to begin the process before the impact hit, before we had to respond to this pandemic in a way that wasn't thoughtful enough, or we were reacting rather than responding. We anticipated some changes early on. So early on in the process, when COVID-19 wasn't much of a topic here in the United States, CMB had already begun the process of reaching out to the borrowers and those users of the EB-5 funds from our more than 70 partnerships. We sat down, we discussed with them. Hospitality industry has been significantly hit. We wanted to know what their anticipations were. We wanted to know whether the construction timelines were going to be impacted. We wanted to know every thought that they had about a negative impact on their business. So importantly, it's not that COVID-19 is here now. It's what happened before that and when we anticipated it. And we continue to go through the process of evaluating our borrowers. We have a good communication with them to begin with, and now we're continuing to expand that communication and talking about those day-to-day business things that COVID impact may have. So the question remains then, rather than having to respond or to react, isn't it better to have a company that's been around long enough and with the wisdom of leadership that knows how to respond in these difficult times? I submit to you that answer is yes. Rather than having to worry about what's coming, we had already anticipated that and sat down with our borrowers and move forward with those discussions. And that's a significant difference that CMB and the Hogan family have brought to the industry and to our limited partners, our borrowers, and those families who have trusted CMB over the years. So that leads me to introduce to our participants today the current CMB project, CMB Regional Centers Group 78. And this project, the investment partnership, consists of two separate projects, Waterman TI and VIP 215. And the names are a little bit unusual, so let me drill down on those just a little bit. The Waterman TI subproject is a project that includes the build out. And we have, in this particular project, it's a 1 million square foot or about 95,000, 96,000 square meter building. The building itself is already completed. It's been completed and it's in Southern California. It's in an area known as Alliance, California. And we'll talk about the developer of Alliance, California in a moment. It's on the footprint of the former Norton Air Force Base. And that brings us back to CMB's history. CMB stands for California Military Base or Closed Military Base. And this again goes back to the fact that the footprint of this particular development, as many others that have preceded it, that CMB has partnered with Hillwood on, is the fact that it sits on this footprint of the former Air Force Base that was closed in the 1980s. Since then, CMB and Hillwood as master base developer, it began the process of revitalizing and repurposing this former military installation to civilian use. And this is the next step in the process. There's already been a lease signed because the building is already completed. It's a 10-year lease agreement has already been signed. So the EB-5 funds then are going to be utilized to do the build out, to do the, make this building ready for the new tenant to move in. It includes some modifications to the existing building, and they've got some other construction things to do. And then there's also some proprietary equipment and some other make-ready steps that are going to have to take place. The EB-5 funds will be utilized in concert with the tenant requirements to move into this building. The developer, Hillwood, already has completed the building. They already have their equity in the piece, and they're using the EB-5 funds for this portion of the project to help to fund the build out of this project to make it ready for a Fortune 500 e-commerce, top e-commerce retailer will move into this building once it's ready to move into. And remember that e-commerce Fortune 500 company has already signed a 10-year lease. A pretty amazing situation and an amazing opportunity. When we look at that particular project that we pull back, let's talk about location. You know, and this is kind of a real estate development, and the key words in real estate are location, location, location. Looking at the location of this, the Inland Empire is an area of Southern California that lies between Los Angeles and Las Vegas. It's on the edge of the desert. The property values there are high, but they're not as high as they would be in downtown Los Angeles or Long Beach. So the location is terrific for these types of 1 million square foot or 96,000 square meter developments. And it shows here the Inland Empire Quarterly Economic Report by John Husing, Dr. John Husing, an economist in the area, said that the e-commerce companies in the first quarter grew another 14%, almost 15%, saying that e-commerce operations typical to Amazon.com represent nearly 12% of all consumer buying in the United States. We know that an e-commerce retailer is going into this particular location and has signed a 10-year lease. And when you look at the location in the Inland Empire, Jones Lang LaSalle, a very famous real estate company, an analyst in the real estate industry, says that rent growth in the Inland Empire continues to be exceptionally strong. So now not only do we have a great location, we also have a tenant who is moving in that is participating in an explosion in the e-commerce industry. So this is really a win-win development and a win-win opportunity for those investors who are looking to invest in an EB-5 investment. The second project is a sub-project that's known as Veterans Industrial Park 215. This one is almost twice the size. Again, 2 million square foot, about 186,000 square meters. That is going to be built on another former military base, the March Air Force Base in Riverside, California. Also located in the Inland Empire, also located in areas where there is significant demand for the industrial and logistics type buildings, because the demand is much, much greater, according to the Jones Lang LaSalle report, or inferring in what they're talking about in the Jones Lang LaSalle report, then there is available space for the type of industry that is growing so well here in the United States. I read a story just the other day that it looks as though e-commerce is going to double in the number of dollars that it generates. It's 600 billion today. It's projected to be by 2025 to 1.3 trillion. And that's the type of industrial developments that we're talking about in CMB Group 78. Now let me introduce to you very quickly an important partnership, and that partnership is between CMB and the project developer for Group 78, and that's Hillwood Development Company. Hillwood Development Company is part of the Perot family of companies, and Ross Perot Sr. is really quite an industrialist. He's a man that, he's the late Ross Perot Sr., quite an amazing American success story. Rose from very little money in his pocket, served our country in the military, and then went on to become a great industrialist and a great visionary. He ran for president a couple of times in the 1990s, and he did not win the presidential election, but he did change the face of American politics for many years thereafter. His son, Ross Perot Jr., his vision has been Hillwood and the development of the 55th largest inland port in the United States, the 55th largest port in the world, busiest port in the world, and it's nowhere near the water. It happens to be in Texas. And so that was Ross Perot Jr.'s vision, and Hillwood is the outcropping and the manifestation of that vision. Hillwood's footprint includes experience in 59 industrial markets, 27 states, and based in 5 international offices around the world. They're a multi-billion-dollar company with a global footprint and 30 years of experience. It's a terrific partnership between CMB and Hillwood Development Company. Their goals are aligned with our goals. They're a very, very conservative company, just as CMB. And the proof is that we've done 31 different separate and distinct EB5 partnerships with Hillwood Development Company. 14 of those partnerships have already seen a return of capital. 25 of those 31 partnerships have approved I-526 or I-924 applications approved. And there are 5 partnerships with I-829 approvals. And so you can see that that partnership is broad, and it's been successful for those investors who have looked to CMB and partnered with CMB with their EB5 investment in a CMB and Hillwood, or a Hillwood and CMB opportunity. Quickly, the funding is $72.9 million will be utilized or is authorized to be raised in this particular partnership. Total development costs are $244.7 million. And the senior loan is 47%, equity is 23%, and the EB5 loan comes in at about 30% of the total financing package. Important to note, just as in every other CMB project, the money that it would take to complete this project is already committed. The EB5 funds in this particular project for the TI project will replace equity, and the equity is already committed. So as the EB5 funds are raised, then the equity from Hillwood will be replaced, and remaining with that final portion of EB5 funds and Hillwood equity as part of that capital. But again, there will not be a shortfall of funding. Should there not be sufficient EB5 funds raised, that's not a problem. Hillwood equity would remain, and the projects will continue to move forward. This is a quick rundown of the mapping that shows that the projects qualify for the $900,000 investment. They are both located in targeted employment areas that meet the new regulations and standards set forth by the USCIS. Critical, remember, the EB5 is a jobs creation program with an immigration benefit. Every investor must demonstrate that they've created at least 10 jobs. 81 investors for this project in Group 78 means that they would need to create at least 810 jobs for everyone in the partnership to qualify for their EB5 investment and their I-829 approval. The total qualified jobs that are projected by our economists using RIMS 2 evaluation methodology shows that more than 1,300 jobs will be created. A significant amount of jobs for each and every investor beyond what is minimally necessary. It's a job buffer of about 63%. So a significant number of jobs are being created, and substantially more are projected to be created than are minimally necessary or needed for every investor to qualify for their I-829 petition approval. So when you get down, when you distill some of those key reasons why the CMB Group 78 makes sense, the developer and CMB have a long-term successful relationship. The project qualifies as a $900,000 EB5 investment. The EB5 job creation, job buffer that we just talked about is significant. CMB is investor focused. Hillwood is very conservative in their process. The growing demand for Inland Empire and industrial logistics market is exploding. The e-commerce business is exploding, and this is an ideal opportunity with a project. The building is already completed. The lease is already signed with a top Fortune 500 e-commerce retailer. This stage is set for success for this particular project. And every project that has been put forth and evaluated by the USCIS has been approved 100% of the time. So I can't tell you thank you enough for your time and attention today. If you are looking for a good quality EB5 investment, you don't have to look any further. Reach out to us, scan the QR code, get with one of our team members so that we can share some information that we can share with you about this opportunity with the Hillwood and CMB partnership, Group 78. Thank you. Now I'd like to change gears. That's the informational piece about CMB and our current project. I'm going to transition to somebody that's got a lot of foundational information for those that are ready to come to the United States or thinking about coming to the United States. Ms. Dianne Stewart. Dianne, again, good morning. Thank you for being here and thank you for sharing your time with us today. And please take it away.
Hey, good morning, Ky. Thank you so much for inviting me once again to be part of your Coming to America series. It's a real honor to be here with all of you this morning. I am Dianne Stewart, and I am the president of Pathway USA, and I've been helping families relocate to the United States for about 14 years now. And our prime purpose is to assist you not to make the mistakes that I made 20 years ago when I brought my family from South Africa to the United States to start a new life here. We unfortunately didn't know what we didn't know. And so I spend my time educating my clients, helping them, hand-holding them, and preparing every aspect of their lives to be successful here. So we're going to talk about how you go about preparing your life and how to make that successful move to the United States. Ky, could you move on my slides for me? Would be great. First of all, there's some very important things that you need to decide when you arrive, or before you get to the United States, is where are you going to live? Very important to open a bank account in the United States because a lot of things cannot happen unless you have a US bank account. And I'm very proud to announce that we've spent a lot of time researching an opportunity here in the United States for our clients to be able to open a bank account without physically being here, which was not possible before. But with COVID, we had to adjust and we had to make these things possible for our clients. So we are now able to offer our clients a personal bank account that they can start moving funds over here to do the things that they want to achieve before they get here. And one of those things is purchasing a property. The property market, happily, is still doing extraordinarily well in the United States. It's booming in my area. I know it's booming in California and various other areas of the country. Houses are moving off the market at a huge rate. They're being sold in hours rather than days. So those are three things that you can consider, which are very important when moving to the United States. Ky, if you'd move on for me, thank you. When you arrive in the United States, there's some very important things that you need to do immediately because these things impact everything that you may want to be achieving. For example, you need to get a driver's license as soon as possible. Very difficult to purchase a vehicle without a driver's license. Next most important thing is you need to apply immediately for a social security number. These can take a couple of weeks, especially under COVID. Things are taking longer, and so as soon as you get into that application, the better for you. And then most importantly as well is to develop a personal and professional network when you get here. People need to be exposed to their new environment, and a great way to do that is to join professional organizations in your field, meet people, and reach out to Americans. They're incredibly helpful and incredibly ready to assist with any questions you might have. Moving on, the living in America is obviously also a challenge for people coming from different parts of the world because things are done differently. Most importantly, we have what's called a credit score. Every individual in the United States, or adult individual, has a credit score attached to their name. So every time you want to purchase a house, purchase a car, get a mortgage, buy a cell phone, they will access your credit score to see how well you pay your bills. And that's an incredibly important building block for the future of your life in the United States. Also, you may want to establish a business. You may need to talk to professionals who can help you source a business that you'd like to purchase. to do a due diligence on that business. For example, Jack Santaniello, our guest that will be speaking after me, will tell you how important a due diligence exercise is when wanting to acquire a new business. You need to know exactly what's going on with that company before you make an offer on it. And then very importantly, interacting with Americans. Immigrants in the United States, I find, are quite prone to wanting to stay with their own countrymen when they get to America. I encourage my clients to mix with Americans and to really embrace the lifestyle, the wonderful lifestyle that I've enjoyed here with my family over the last 20 years. So I look forward to helping people coming to America. I'm your concierge service person. I deal with every aspect of your relocation, from your family requirements to your business requirements and anything in between. Thank you so much, Kyle, for giving me the opportunity today. Oh, I see, we're not done yet. Forgot about that slide. Obviously, establishing a circle of American friends, always asking for help, and volunteering. Everybody has interests, and so there's always a group of people that would be delighted to accept you as a volunteer to help with their particular organization. I have clients who have disabled children. I have clients who are interested in the arts. I have clients who are car enthusiasts. So getting to know people in the United States is really wonderful when you have an interest like that. So I encourage you to do that as well. I think we're moving on. Thank you, Kyle. So if I can help you to get started before you get here, when you get here, and to make your transition as smooth as I can and ensure that your family is as happy as they can be, please contact me. I'm happy to take any questions via email. I'd be delighted to speak with you and your family. Thank you so much, Ky.
Thank you, Dianne, and I certainly appreciate your time. You went through the information very quickly, but I'm sure that all of those years of wealth of knowledge and the experience serves you and your clients well, and have had nothing but compliments on the work that you have done. And I have nothing but compliments for the work that you have done in helping folks land that I've been aware of. So thank you for that. And for those of you who are thinking about coming to the United States and need a landing service, be sure to contact Dianne. She doesn't take a nickel from us. We wouldn't pay her anyway as far as any type of landing service type fee. But she certainly is someone that you can trust and rely upon. So feel free to contact her.
Thank you, Ky.
Thank you. Okay, Jack.
Good morning. Good afternoon, good evening, depending on where you're listening in from. I thank you for the opportunity to participate in this educational format. I agree that it would be wonderful to be in person, at least those of us speaking and then being able to present. But I think this also provides a wonderful opportunity and forum for all of us to get together and kind of get through some of the basics, a lot of the things that are on your minds with respect to this potential big next chapter in your personal, professional, family lives in potentially coming to the United States. So as the slide shows, America's Tax System 101, at least in the American university system, and I know in international university systems, the 101 designation is the first level fundamentals. And so that's really what we're going to cover today for a little bit of time with my short presentation and also in the Q&A session. Please understand that I know there are a lot of burning questions of your particular circumstances and what you have going on and where you are in this process. And it would be unwieldy and unmanageable to answer all those questions, but also it relates back to your own particular circumstances. So when you say, I have this issue, how do I resolve it? There are so many factors that go into analyzing that in relation to where you're at in the process, what you've invested, what you potentially are going to invest into, and those kind of things. So we're going to try to answer questions on a very broad-based spectrum in order to give you some familiarity of what you may be encountering down the road as you enter into the US federal tax system. So if we can go to the next slide, what I'm showing on this slide is just basically federal taxation categories. So generally speaking, the way the tax system works in the United States is you have an overlay of federal taxation by the national government. And then you have pockets of authority. The next level would be on the state level in territories of the United States. And then it filters down to local. So it could be county, it could be city, it could be municipality. So other pockets of government that have ways of surcharging you on whether it's income generated actively from working from a business down to passive income, investments, and those kind of things. So you see some of the broad categories on your screen now, which is individual income tax, corporate income tax, estate and gift tax, Social Security and retirement taxes. That's generally referred to as payroll taxes. And a subcategory of that is that there is a responsibility typically on the employer and the employee in paying those taxes. So it's a shared responsibility between employer and employee. The employer collects the payroll taxes on behalf of the federal government as essentially a trustee, and then remits those payments to the federal government. So in other words, they're taking money out of your employees' paychecks, holding onto it, and then submitting it on a periodic basis. I would say that is where a lot of business owners get themselves in trouble. And it's because they take the money out, but somehow it doesn't end up in the US Treasury Department's bank account. And you see a lot of tax liens and other litigation, other things going on in order for the federal government to try to get that money. And then you have excise taxes and other taxes. And so we'll talk about a few of those things as well. But I go back to what I say is that there are various ways to impose taxes. So for example, Ky had mentioned that in some states, or maybe Dianne did, that you have states that do not impose state income tax. So you don't have that level of taxation on the employee's earnings, but of course there are ways to get the money from employees otherwise, in the form of whether it's a higher sales tax, so a tax that's imposed upon you as a purchaser of goods and services that then is remitted to the state. It could be property taxes, typically real estate property taxes. And so we'll get into some of those categories if you flip to the next slide. But I first want to show you, this is an example of, and this is the current federal tax rates. What I think is a common misunderstanding, even amongst US taxpayers and US citizens and residents who are paying, is that if you make, let's say the 35% category, if you're in that range, let's say you make $250,000 unmarried, that you're paying 35% tax on that $250,000. That is not the case. It is a tiered and stacked system, so that where it says 0 to 9,875 US, you're paying 10% on that. And then the next dollar to the next top of the tier, you're paying 12%. So it's a stacking of 10, 12, 22, 24. So when you, a lot of times when you hear people say, I'm in this tax bracket, it usually refers to the highest tax percentage that they are paying on their income. And so this is just a breakdown. And then unmarried, married, heads of household have different benchmarks for where the jump ups in the rates go. And in some cases, it says married filing separately pay the same as unmarried. You find scenarios that you have married individuals who, if they file separately, end up with less tax burden for whatever reason. I personally have experienced that in my own tax paying history, where we have filed separate returns because it wasn't a huge savings. Actually, kind of in the scheme of things, it ended up being more than I thought it would be, at least worth the effort of doing 2 tax returns and paying a tax preparer to do 2 returns instead of 1. So if you can go on to the next slide. This is just a snapshot for your reference as to sources of federal tax revenue. So obviously, as you see, the individual income tax is the highest percentage over the years, in that's where federal tax revenue comes from. And then you have corporate income taxes, Social Security, retirement, payroll taxes, as I said, excise taxes, and other taxes. So that's a breakdown of where things come from. There's a discussion for another day in more detail about what corporate income taxes mean necessarily, because there are ways to, depending on how you set up your entity as far as tax treatment goes in certain circumstances, that you end up reporting the income on solely, theoretically, on your personal returns versus a corporate return, but we can discuss some of that as well. So turning to the next slide, which is just as a point of comparison, U.S. state taxation categories. I said you have state income tax. You have many states that, I shouldn't say many, several states that do not impose a tax on individuals' income. They rather impose it on corporate income, on sales tax, and property tax. And a lot of times the property tax, there's components of that which end up, when I get my property tax bill for my home here in the U.S., there's they show the components that, part of it's going to the public school system, part of it is going to the local fire department to pay for those services and kind of things. So the next slide is just a demonstration of what, as I said, state individual income taxes, that the tax rate is not uniform across the country. And you have some, based on the color coding, that you can see that there are some states that are more significantly tax, I guess I should say, adverse to all of you in coming into the United States. So when you start thinking about down the road where you want to live, and you really should have, as you go through this process now, thoughts about where you might end up down the road based on some factors like this, which is the taxation. And going back to a comment that I said before, which is that don't assume just because a state doesn't have personal income tax, state income tax on income, that is where you ultimately want to be. There is a phenomena in the United States where you have Northerners, like in New England, which is New York, New Jersey, up in that area, that somehow they end up in Florida. I think that's more of a weather thing than it is a tax thing. But also in seriousness, that state income tax for older individuals, or the lack of that, sometimes is a huge benefit because they're being taxed at a lower tax rate based on the overall income of their retirement funds, et cetera. So that is essentially a snapshot of kind of the federal and state tax system. And I know that we want to go into a deeper discussion maybe in relation to EB-5 issues. And so I think that, I don't know if we go on to the Q&A session or where we go from here, but thank you for allowing me a few moments to share some aspects of the U.S. taxation system.
Thank you, Jack. And you're right, we do have significant question and answers. We've received some, and Andrew will take the lead on that. But thank you very much for your time and sharing the basics of the tax system. It's not as fearful as what it may be if you're outside the United States. There's a lot of fear when they hear about taxes and how burdensome it can be. I think you've led us to through the path that it's not as crazy as maybe you've heard. It exists, but it isn't necessarily something to fear. It just it's part of the privileges of living in the United States.
Thank you, Jack, Ky, and Dianne for the great presentations. Jack's allowed definitely some time for Q&A specifically with him. Diane's going to begin with some of the questions that we had received ahead of today's event. Then we'll move to the questions asked during the event today. We'll do our best to address as many of the questions today as possible, of course, as time allows. So Dianne, would you please lead with our first question?
Great, I'd be delighted to. Jack, we've had some questions here. If I'm not yet a resident in the United States, how do I go about filing my tax return? And what help is available to me to assist with this tax filing? And is that recommended? In other words, how do I know that I'm getting the right legal advice in order to plan my taxes if I'm not living there yet?
Absolutely great questions. And I want to reiterate something that all of us have said, that what we talk about today is not specific advice. And as I said before, that it's it's not tax advice, it's not legal advice, it's not the end all be all on the process for EB-5 or tax treatment. It's more of guidance, and really that your specific situations and what is going on are really impactful on the choices and the pathway for you to get to your intended end result. Having said that, if you're not a resident in the United States, typically you file a form that's similar to the form that residents and citizens file. It's called 1040, but it's a -NR for non-resident. And to Ky's point, it looks sophisticated. If you were to pull up, and I have several of these, and they're called publications and tax guides and all kinds of wonderful reading that will put you to sleep in the evening if that's what you need, something to help put you to sleep. And it's a lot of legal and technical jargon. But it is helpful to get snippets of information in relation to that. So there is most forms will have instructions in relation to what you need to fill out, and will guide you through it. Having said that, it is important that you seek the correct professionals to do that. So even on simple choices. So for example, earlier this morning, I was talking to a client, and they're like, well, should I be an LLC? Should I be a corporation? And I gave them my thoughts, but I said, it is really a tax decision, tax implication that you need to discuss with your certified accounting professional, your CPA, so that you have the proper advice. Because me sitting here having a discussion with a client, I don't have all the information that I really need in order to be able to fully analyze and provide guidance. Nor do you want to, and I say this with all humility and modesty, pay at my hourly rate for me to go through your tax return, prior tax returns, or your financial information, your personal financial statements, etc. And really, a professional is warranted. On the legal side of things, certainly I am not a tax attorney, but obviously in my M&A practice, international, domestic, I have a lot of opportunity to be in that world. And so, obviously have some familiarity, or I wouldn't be speaking with you guys today. But that, and we have tax professionals that, one of them is 2 offices down from me in my office downtown Charlotte. And, I'll walk in and it's just like Googling immediately. It's like, boom, here it is, statutory section, etc. It was funny in earlier years as a young associate, you mostly get, okay, what do you think is the answer? I think as you get older in the profession, it's like, okay, I'm not interested in an educational moment. Just tell me what the answer is. And it's reciprocated. People will come into my office and say, all right, what about this? And, I'm like, well, what do you think? We don't do that to each other. So it's, very fortunate to be in a law firm, a professional organization that we have the ability to do that. So, kind of a little bit of shameless plug. I'm very, again, modestly and humbly appreciative of the people that are around me and the professionals that are around me that are able to sort through a lot of this stuff. But to kind of get back to your question, yes, definitely recommend seeking the correct professionals to do that, to do all of those things, whether it's legal, accounting, even down to when you get closer to coming to the US, where do you want to live? You know, I have questions Charlotte is, North Carolina is kind of a mixing pot of, a melting pot of people coming from various places from the US and from other places. And so I get a lot of questions of, you know, what do you think is a good place to live? North Charlotte, South Charlotte, you know, and we're 10 miles away, actually from I'm in South Charlotte, so I'm half a mile away from the North Carolina, South Carolina state border. So things like that, you know, there's no shame in asking questions, because you may regret not having asked those questions down the road.
Jack, thank you. Just to move on, another question that's quite common is my overseas income taxed in the United States? And what about worldwide tax? What are those implications for certain countries? Can you speak to that?
Sure. So a couple of things on that. As a U.S. citizen or resident, the perspective of the federal government, of the U.S. Treasury, of the Internal Revenue Service is that what income you gain or receive worldwide is taxable income. But then it's attenuated by various treaties, various credits, and various offsets in relation to that income that is made outside of the United States. And then there's reciprocation in that, you know, if you're not quite yet or not going to be a U.S. resident or a U.S. citizen, then, but you are physically located in the United States, then, you know, there's some offsets in relation to that. So, you know, it is the general concept that the answer is yes, but it depends where you are at in the process. So for example, a non-resident alien, and again, this is friendly advice, I'm just saying generally speaking, but generally speaking, that a non-resident alien is not subject to taxation on capital gains necessarily, just because they're capital gains, whereas most capital gains, meaning the investment income that you receive, passive income, whether it's monetary investment, interest from a bank, or interest on another investment, not necessarily taxed. But the difficulty, as I've said before, and the reason why you need to seek a professional is that if I were to map out what the US tax regime looks like even under the non-resident, the NRA regime, non-resident alien regime, it would look like a huge spider web and a huge, you know, yes, no, and just, you know, the end of that chart would be just huge, because there's so many pathways into the what ifs. And so while I say that yes, you can keep in mind generally yes, but there are exemptions, exceptions, credits, offsets that go in both directions.
Just a last question here, and maybe Kyle can chime in on this one as well. Is there tax payable on my EB-5 investment when it's returned to me? I think that's maybe something you could speak to, Ky or Jack.
Not being a tax expert, but here's what my observations have been, is that the initial investment, when it's returned, is not taxable. It's not income, it's part of the original investment. So it's not a taxable consequence. However, there may be some countries where that money has originated that you may need to explore that with a professional. But in my experience, that 500,000 or whatever that amount happens to be when it's returned is not a taxable incident when that money is returned. The money, however, any distribution of profits that happen every year, that's quite another matter. That if you are responsible to pay taxes in the United States, then that becomes taxable income. And so those are some considerations, and Jack talked about that. If you don't owe it, if you're a 1040 non-resident, if you're not responsible to pay, then you can make the filing appropriately. Jack?
Yeah, and I would add to that just taking a step back, general perception is that money that you are investing is money that probably has been otherwise taxed. In other words, it's sitting in your bank account, probably taxed already. So they called that in the United States the res, or a lot of times when you're opening up a company, your initial capital contribution into the company. So, without getting into the details of how the AB5 works with respect to, the money that goes in kind of as a holding company, and then you have an operating company, and then, because again, that's another form of complexity in the EB5 program, that you have, this kind of bifurcated levels of investment that have their own separate tax treatment depending on where the income is and where you're pulling the income out of. So it is a matter of the fact that, so for example, I take $100 and I invest it in Microsoft stock. So I'm not going to get taxed on that $100, but I will get taxed potentially on the gain that has been achieved when I liquidate that asset. Or in some cases, if I lose money and I liquidate it, then I have a loss that I may be able to offset some gain on a different investment, so that the net result is that I can offset some taxes on some gains. But again, very, very topical, high level discussion about offsets and capital gains, et cetera. But the concept is that the base money that you put in is typically not taxed again, presumably because it's already been subject to taxation, whether in the US or abroad.
Thank you so much, Jack. That'll conclude our questions from my side. But there may be other questions that Andrew might have, our MC might have for the audience.
Yeah, thank you, Dianne. Ky, this is for you. This is actually going to be something that is related to projects. So one of our participants today asked, if the project ends up not being successful in terms of job creation, will the green card application be denied?
First of all, I want to step back. The EB5 rules are that if the investor or the participant fails to create sufficient jobs, and that's a minimum of 10 jobs as a result of their investment, their permanent green card, they don't qualify for the permanent residence card, and it would be denied. However, let's step back from that. That risk exists. What does CMB do to mitigate or eliminate or manage that risk so that situation doesn't happen? And for a CMB investor, it's never happened. There have always been more than enough jobs, more than sufficient jobs for every investor that files their I-829 petition with the USCIS to qualify for the approval of that I-829 based upon job creation. And the way that way CMB mitigates that is, we understand first and foremost how the jobs are created, and our job creation model is based upon capital expenditures. The indirect cause of the money flowing into the United States economy is many things, but the thing that we pinpoint is the jobs that are created as a result of that money flowing in the US economy, and the impact that it has on job creation. That's measurable. And the economists, we have 4 economists on staff that evaluate that the impact of that. And we also use what's known as an economic modeling methodology, long-term, that says that the methods that are being used are computations derived from the Bureau of Economic Analysis, the BEA, and the tools that are used have been derived to evaluate what is the impact in the various parts of the US economy when a given number of dollars or an economic impact of a minimum quality of spend or money flow occurs. And that's a lot of chatter that says that we put input how much money is spent, and the computations have already been figured out. The data sets are already, we buy from the Bureau of Economic Analysis, show us how many jobs are created as a result of that economic activity. And so we start there. We know how many jobs are going to be created based upon how much money is going to be spent in that given project. So we work backwards from that point. So we manage job creation by knowing what the outcome will be. those numbers are acceptable by the USCIS, and they've been accepted thousands of times, countless thousands of times, using the RIMS-2 methodology. And that's proven by the number of I-526 petitions and I-829 approvals that CMB has had over the many, many years for our investors. Thank you.
Thanks, Ky. So Jack, can you touch at a high level on inheritance tax and wealth tax? I guess they're probably just kind of asking some of the nuances for that for the US side of things.
Yeah, I will share my thoughts on that, but obviously not being a tax, I wish I had my estate planning attorney on here, one of my partners who could better answer that question. But it really, the concept is that, the federal government wants to get paid on the transfer of funds from one person to another. What is interesting is conceptually, tax has been paid already on the generation of that wealth, but they're basically saying if you get it, if you are a recipient of certain funds, then you as the recipient should have to pay certain taxes in relation to that. And, but there are ways around that, or ways to address that, the ways to mitigate that, whether it's putting it into a certain trust where the transferor has the ability to continue to receive and use the income off of the base of the trust amount, but then transfer it at a certain period of time over to the beneficiaries. There is also the interplay of, you have certain exemptions with respect to transfers of wealth. You have a maximum amount per person per year that you can transfer to someone else, whether it be a child, grandchild, total stranger. And then you have lifetime transferability exceptions that allow you to transfer money without a tax implication on them. And then you have certain interspousal benefits where, for example, and recently I'll give you an example of an IRA, individual retirement account. IRAs are, I would say, in many cases, monies that were gained by a person through a 401k program. So a program that is set up that if you as an employee put money into this fund, the employer will match it, and it has beneficial tax consequences. Usually tax deferred, meaning you don't have to pay tax till later on. And there are penalties for early withdrawal, but the theory is that later on in life, when you're older, your tax rate is lower. So again, we could spend an entire day talking about tax planning, but in the IRA example, so you have an IRA, the 401k is money that is, the IRA money is money that has come from prior 401ks from various employers. So for example, I have a friend who is on, he's in his early 50s. He has been employed by maybe 5 companies. Each of them had their 401ks. His IRA is the aggregation of those funds. And then he can essentially control the investments of those funds. But the question was, should I start transferring those funds to my intended beneficiary or not now? And, or should I put it in a trust? And, we talked about certain things, but the end result was that because he is married and because there's this interspousal exemption and beneficial tax treatment, if the surviving spouse gets that money, then the answer in his particular circumstances was leave it parked where it is. And then, let's discuss it later on, meaning, 5-6 years down the road, maybe when things have changed. So that's kind of a general overview of what the concept is, but there's various ways to do some tax planning in relation to that.
Thank you, Jack.
There's also a question, Jack, about the wealth tax, and I think that's a misnomer that people that the government is in some way going to reach into your bank account and take money out of that bank account if you're too wealthy. That doesn't exist. Could you touch on that? I know that was part of that question.
Yeah, it's more of a tax on, and yeah, that is a misnomer. I mean, it is essentially the tax is on what is, I mean, and this is what my wife calls a Jack theory, my kids call a dad theory, which is that, because you probably won't find this in writing except in an opinion piece, but you know, it is, there is an inclination under the US tax system to tax people on money that they didn't necessarily work for directly. So that, I don't want to say fell into their lap, because it could be, you know, for example, a child that helped generate the income for a parent kind of thing. But, you know, things like lottery winnings, you know, significantly taxed and those kind of things. So it's really a tax on money that is generated not simply because it exists, but it exists in certain people's hands and may not have been otherwise fully taxed in the opinion of the federal, state, or local governments in the United States.
Thank you, Jack. So I've got another question for you, and it's, are foreign company dividends subject to taxes in the United States?
So a very good but very open-ended question, and it goes back to what I said about it depends where you're at in the process. It depends what generated those that income, and this goes both ways. So it's a matter of what generated the income, where it was located, what is the tax treatment in relation to the parties as between the two of them, you know, as between the different states.
Thank you very much. Ky, this is one that is related to COVID, and maybe you could expand a little bit upon this. You were talking about how the Hogans had got in front of the COVID situation, and it seems like this is maybe a follow-up question to some of that. It says it's really good that you had anticipated, but what impacts will COVID have on the time frame, since a lot of the projects or other circumstances seem to be on hold for right now?
That is a good question, and it's a major concern. And the important thing is, and I want to share, is that each one of our partnerships, each one of the CMB offerings has had a report sent to the investors that indicate what the status is, whether or not there was any consideration or thought or possibility of imminent trouble, whether it be in the construction process or financial difficulty anticipations of meeting the obligations of the borrower to the partnership. All of that information went out, and we started transmitting those reports to limited partners in the various partnerships very early on. I think the first ones went out in March or shortly. If it wasn't before they declared pandemic, it was really close to that. So then the question is, what about the slowdown on projects? There has been no impact on those reports that have been reported. There have been a couple of projects that had seen a slowdown, and that was not the fault of the project itself. Construction has continued. The pace at which construction and job creation was ongoing may have faltered a little bit, has slowed a little bit. Remember, some of the local governments had also had situations where their employees were on lockdown. So the work could be done, but they couldn't get it inspected to take the next step. So therefore, waiting for an inspector or the ability of the city to arrive on the project and then make the inspection to make the next step, that occurred. And certainly that's part of the ongoing today. But all of our projects are in good shape. Those reports went out to limited partners, to the various partnerships. If a limited partner needs that information, they can access their ShareFile account. If they haven't been able to access that ShareFile account, get with us. Our IT experts will walk them through how to access that ShareFile account if they haven't done so already, so that they can review the report, all the financials, and what the anticipated impacts are. But So far, what we know, the projects, those reports indicate that the vast majority of the projects that are under construction are in very, very good shape indeed, and construction and job creation continues to move forward.
Could you maybe expand a little bit, since we're on the topic of COVID-19, as far as any impacts to the application process for EB-5?
Well, there are still filings. The filings are fewer. We believe that as we look around the globe and we see the pandemic and the impact of COVID-19, many countries are either on lockdown. They may be fearful of going out. I know that the enforcement of lockdowns is more severe in some countries than in others. We've seen the recurrence of lockdowns for example, in Vietnam. They're a country that seems to have managed very well during the COVID process, and then they opened things back up, and now they've shut the borders down again. Canada, our neighbor to the north, if you're a foreigner, you're pretty well locked out. So the management of that has gone on, has also tightened people looking outward. Maslow's hierarchy of needs, you take care of what you absolutely need for your own benefit first, and then you look outward and look for other ways to expand your life and your knowledge and those enlightenments further out. But first of all, you got to take care of you. If there's a health concern or there's an issue close to home, that's what people are paying attention to. We certainly understand that. Other families are still, they've made the decision and they're moving forward, and we've been seen some benefits to those families of that. Key though in the process, the USCIS continues to process I-526 petitions, and secondarily, the one main issue, however, is we're seeing that the consulate posts around the world, it's very, very difficult to get an appointment for a face-to-face immigration visa interview when the consulate posts have been closed. And they've been closed since early spring. Some of them have opened in various countries. Many are not open. So it's just a matter of getting things, the consulate posts open, appointments scheduled, and face-to-face. So that's all part of that process. The I-526 petitions are being processed by the USCIS, but then they couldn't get an interview at the consulate post to receive a visa. But people are still making a decision and filing their I-526 petitions, and they're looking for good quality EB-5 investments to do that with, and we've benefited from that, and the families who have trusted us will benefit from that long term.
Thank you, Ky. So Jack, could you maybe touch on capital gains tax percentage on the sale of a company for a resident of the U.S. versus a non-resident?
Generally speaking, the capital gain rate versus ordinary income rate is less. As far as non-resident and resident, it goes back again to the generation of that income. And so, I don't want to speak on anything in particular in relation to that, because again, it's a matter of what are your particular circumstances and where do you go step by step by step. So, but generally speaking, the capital gains treatment of taxes is lower than ordinary income, and so that there is a beneficial tax treatment. I do want to make one comment in a sense that the commentary that I see and that I've in my relationship with the EB-5 program and just taxes in general, but with the EB-5 program, is that from the perspective of the federal government, this program is geared towards getting people and their money into the United States, and so that they feel like that with the processes that they put together is a sufficient enticement to get into the United States. And so that, it's, while there may be opportunity to make it sweeter and potentially doing that, and we have a president that is on one side of things pro-business, but on the other side of things, I don't want to say anti-immigrant, but he's a little more harsh on immigration than prior presidents, and that's not a political statement. I don't like to get into politics or talk about politics. It's just what it is. So you know, and to kind of tie it into what Ky said about, you know, the whole COVID-19, not only in this aspect of immigration, but just generally speaking, the whole world has slowed down. The federal government in the US is part of that has slowed down. The state governments have slowed down. And so it's kind of like, you know, frustrating process already as far as timing goes, but it's, you know, the delays are going to remain, I think, through a period of time and on multiple levels of business. There is also, and I'm going to go off on a little bit on a tangent, but Dianne had mentioned this in some of her opening comments about kind of the purchase process. And I think it's an opportune time to discuss what that looks like on the legal side of things when you're actually in the middle of a transaction buying a business, because I've had, again, good fortune of helping people from other countries come into the US through basically investing in the US, investing in US business, buying a US business. And so the process is that you come in and there is typically a stock purchase arrangement and a contract that goes through, and basically you want the seller to tell you as buyer that this is the world of the company. This is the good and the bad. And if something bad happens while on your watch after the closing, that we are your insurance policy for, in some cases, for doing that. And the level of insurance, the length of the insurance, and I'm not talking about a traditional insurance policy. I'm talking about, let's say you're purchasing a business for $1 million, that you maybe park $200,000 US in an escrow to cover anything that comes up after the closing for a year, 18 months, whatever it may be, that may have been hidden purposefully, or something that just comes up and should be paid for by the seller rather than the buyer. And then, you know, there's technicalities and logistics of the process where, you know, it used to be, and when I was a young associate, that I would get parachuted into the seller's office and look through boxes and boxes of documents, document them, et cetera. In this day and age of technology, we have a virtual data room where the seller will put in documents according to due diligence parameters and allows everyone essentially who needs to review them, including you as a buyer. So, you know, there's certain aspects of that transaction, and then it moves forward from there. And there's a period of time, you know, that you can, what we say, kick the tires essentially on the business to make sure it's appropriate. And in some cases, it wasn't appropriate. And so it was that, you know, on the second try, the second attempted investment of someone coming into the US in the visa program, that was what was successful. And in some cases, it's, you know, your first shot is the best shot and it works. And I have clients who are very happy being here in the US, running their businesses. You know, there's also the psychology and the concept that the EB-5 program is, and again, back to what I said initially, is a method of getting into the United States, not necessarily a way to invest in the United States, ultimately to get your investment out necessarily. So, and I say that just, again, Jack theory, dad theory, that, but that's what I've read is from the perspective of US Treasury regulators that will say to you, to your face, that, you know, are you doing this for the right reasons? And in their mind, that means getting into the US. Yes, they want to make it so that it's beneficial and profitable, and that while you're going through this process, that there is a material financial benefit to you. Why else would you do it? So just take it from that perspective. And then back to the tax treaties, that yes, there are, and I have, you know, I could quote to you, you know, pick a country, pick India, you know, and can tell you what it says with respect to those treaties. And so going back to a comment that there is favorable tax treatment and acknowledgement of the fact that you may be paying taxes elsewhere, and then there's a credit offset against that. And I'll give you an example in my life, which is, we have offices around the country, including in the state of Ohio, and I'm in North Carolina. So I pay taxes to the state of Ohio, but because I've paid taxes to the state of North Carolina, there's a credit for that, or potentially a refund, depending how I want to treat it, for me and for my family. And so, there's, again, the offsets back and forth. And then there's other materials like talking about non-resident aliens and the generation of income. There is this, what's called the 30% tax rule, that for non-resident aliens, there's typically a 30% tax associated with the income generated by a non-resident alien. But then there is, of course, the other aspects and other pathways that, maybe not so fast. In some cases, you're taxed according to the tiers that I had on a slide earlier today. So those were just a few things that I was waiting to see that might come up in the conversations that I just wanted to share with the group.
Thank you, Jack. Certainly is why we always encourage any of our potential investors to seek professional assistance when it comes to planning for the U.S. And your expertise and your knowledge has certainly been enlightening today. We're approaching the end of our event, and it looks like we'll probably have time for one or two more questions. Ky, here's one. It's is there an age limit on the EB-5 program?
At the top end, no. You can be as old as you like to be. On the bottom end, there could be, and the investors need to be used to, the old rule of thumb used to be that they need to be an adult, considered an adult in the United States. Now, there are ways to have investors who are younger than 18 years old, which is the age of adulthood in the United States. And that is a process where the documents are signed so that perhaps the parents or some guardian of those funds can sign the documents on behalf of someone that's younger than 18 years old. I think we've gone down as low as maybe 14 or so. We have to look at the length of time that it's going to take that particular investor, if they're younger than 18, to arrive at the United States. But it's a process. It requires some documents to be signed. And remember, it's an immigration-based investment. So when, at some point, that participant, who is the main applicant, if they're younger than adulthood, they're going to have to come to the United States. So there has to be consideration for lodging, livelihood, where they're going to stay. They can't sign, they won't be able to sign a lease agreement for an apartment, for example. So those things, those documents that do require that they be an adult, those have to be considered. We have accepted those in CMB partnerships. So it's a process, and I'm not the expert, so we get our attorneys involved, and it's a couple of documents, and there has to go through a special process, and we've got that all set up. However, for the family, they need to consider when the child arrives, or what age that child will be when they arrive, that they have to make accommodation, and they have to be able to live on their own and be independent, and to make some decisions on their own. But that's they have to be of legal age to sign a contract in the United States. So the answer is yes, they can be younger than 18, but there's some consideration that the family, we can't decide that for the family. We can help them and make the path available, but the family has to make some good hard decisions before they go down that path.
Thank you, Ky. Jack, maybe one last one here. How does the IRS view profits accumulated at overseas companies owned by U.S. residents?
So that, I hate to answer the same answer with the same question or similar question, which, and a very lawyerly answer that we use a lot is it depends. And it depends on what there's a couple components, which is what is the nature of the income, how is it generated, where is it generated, and then so what is the tax treatment, and then is there some modification to that, whether it's under US law or a foreign law in relation to that. So there's no way really for me to fully answer that question other than to say that, it's, I have a partner who is 15 years my senior, who his mantra is follow the money, and just go through whatever it is that you're doing, follow the money, and then see where the siphoning off occurs by various jurisdictions, essentially.
Fair enough. So it's fair to say seek advice, explain your circumstance, and welcome the input of a professional, essentially.
And I'd like to, Dianne, it looks like you had mentioned, and this was something that I thought was interesting in your presentation, was the fact that you said you've got access to setting up bank accounts without someone being in the United States. That's kind of a new nuance, and I know that people would be interested in that. Can you explain a little bit more about that?
Yes, I certainly can. With COVID, it became impossible for our clients to physically travel to the United States to open a bank account with the express purpose of purchasing a property or a business. And US law says that in order to purchase a property in the United States or a business, you do need to have an American bank account that it can come out of into the escrow account at the attorney's office. So we had a real issue with that because our clients were even prepared to purchase properties and businesses remotely, not even coming to meet or to view the property that they were purchasing because it was a good time to buy. And so we looked long and hard to find an American bank, which we found, which is a registered, well-known bank in New York, who is willing and able to open bank accounts for our clients for this purpose. And we have opened a whole bunch of them to date in the last month, and it's working very well. They have an excellent internet facility enabling our clients to transfer funds, monitor their account, and disperse those funds where they need to go. So I'd be very happy to speak with anybody who would like to, who's interested in using that service that we have.
Thank you. I found that quite interesting, so thank you for that. Jack, any last words? I know, Andrew, we're backed up against time, but any closing words?
Sure. I first want to thank everybody for listening in. Hopefully we answered some questions. I acknowledge that we can't answer all of your questions. I appreciate your desire to come into the United States as a child of immigrants, as I joked around with Ky and Dianne and Andrew, that I am half mafia, half cartel, in that my father is obviously Italian by the last name. Maybe not so obvious, I'm European, and my mom is from Colombia, South America, so hence the mafia and the cartel. But I really, I think I have an appreciation, I hope I have an appreciation, let me say that, I know I have an appreciation for different cultures and the melting pot that is the United States. So I welcome you and am cheering for all of you for a successful entry into the United States. It's a great place. There are great places around the world, but obviously I'm biased being a US citizen, but having that ethnic background, again, appreciative of all of you that are listening in today.
Thank you. Dianne, you're muted.
Thank you so much, Jack. It's been a pleasure having you today as on our team, and thank you to Ky for having me yet again. And yeah, I think we all have an immigrant experience. Mine is still playing out, and so I'm delighted to be in the United States. It's given me unbelievable opportunity, a wonderful quality of life, and I would recommend it to anybody. So thank you so much to Jack and Ky for having me on today.
Thanks to you both for sharing your time and expertise with us today. And I'm going to show what's coming at us for next week. Now, Diane, we like your work so much, we're going to keep you busy. Next week, we've got Mr. Todd Curry. He's the founder and wealth manager of Second Half Strategies, and he's going to talk about some things that Jack touched on, individual retirement accounts, trusts, and some financial planning. And that's going to tie together with what Jack talked about in ways that the U.S. system allows for generating income and protecting some of those income from taxes. So it's an add-on. It's part of that Coming to America series, and that's next week. So if you have an interest, please click the QR code or send our information, info@CMB 5Visa, and drop an email. We'll see to it that you get the information on how to log in and how to join us next week for the next in our series of Coming to America.
Well,
Andrew?
thank you. Yeah, thank you to our guests and Ky. A sincere thank you from us to all of you for sharing your time and staying throughout our entire presentation. We hope you found this to be a valuable resource while planning to move to the United States. Feel free to use the contact information as Ky stated on your screen at this time. We'll do our best to get a video link out if you'd like to watch again in the next coming days, or even to share with a family or a friend. You should expect to receive that. Like I said, in the next couple of days, we'll hopefully have the video out and a link available. Again, thank you, and we look forward to seeing you all stateside. Take care.
Thank you.
Thank you, everyone.